If the massive rising wedge patterns on SPY and QQQ are playing out, the market will absolutely make new lows. Markets don't move in straight lines, and oftentimes moves can shake people out. The patterns we've been covering are multi-month and year patterns, meaning their up and down swings will be much wider. I've witnessed countless rising and falling wedges as well as symmetrical triangles play out, and there are always counter-trend moves in between. Join me as we cover short-term upside targets on SPY, QQQ, and IWM, as well as deeper downside targets. Nothing I'm about to share is financial advice, and you should always seek a licensed financial advisor before making any financial decisions. So kicking things off with QQQ and SPY on the 4-hour time frame, let's draw some structures. Notice here how we've got a double bottom followed by another double bottom, and if we hop over to SPY, we can see the same basic structure has formed right there. So do these patterns look familiar? If they don't, let's revisit what I shared on Apple weeks before it actually played out. For those who have been following me for a while, this pattern will look pretty familiar. Apple had a double bottom, which is a pretty wide double bottom, followed by an impulsive move to the upside, then another double bottom, another impulse, and then one final double bottom with a last impulse. But notice how we had diminishing returns each time that we broke out from that double bottom. It didn't push up as high. And once we got that final double bottom and final push up into resistance, look how quickly we got this very rapid sell-off. And I think that's what SPY, QQQ, and even IWM are setting up to do right now. And since we're already taking a look at Apple on the weekly time frame, look at this very strong support line that goes back to December of 2018. Apple is currently well below that, and after this little bounce plays out, I could absolutely see Apple going down to retest about 200 even to 203, which lines up with this support line here in orange. Back to SPY on the 4-hour time frame. If this is a pattern of diminishing returns, then we may see SPY push back up to somewhere about 573 to 575, retest this previous 565 support area, then make a mad dash all the way up to about 580 in the week or so to come, which would also coincide with the previous minor channel support here in yellow and the 50% Fibonacci retracement. Of course, these are just rough estimates. The 200-day simple moving average here in purple is currently at 573.51, so it also makes sense that we would get an initial rejection off of it. After this push up, though, I believe it's very possible that the push to the upside could be over and the market starts rolling back over to the downside. Imagine what will happen if the bulls push it up that high and then it starts dumping rapidly just like Apple did. There could be mass panic. If we find strong resistance around that 580 area, SPY may retest the 200 simple moving average, probably around 574 to 575 at that point, and the reaction there may tell us if we're headed higher or lower. And just real quick, I want to mention, a lot of people say, oh, your charts are cluttered, but a lot of these levels are intraday, like day trading levels, and I leave those on there. But then I've also got multi-week and multi-month levels that hold different significance. And institutions also look at the 50 weekly simple moving average here in lavender, so it's no coincidence that the market pulled back up towards it around 565, and it's a super key dynamic level to watch. Looking at QQQ on the 4-hour time frame, if it's following the same pattern, I could see it pushing up to about 489, possibly even the upper resistance line of this thing that I'm calling a bear flag here in purple, retest about 485, then get a final push up to basically around 494, which also coincides with a 38.2% Fibonacci retracement. If QQQ is actually bullish enough to get back up to the previous support line of the multi-year bullish channel that I've been covering around 504 to 505, which would also be the 50% retracement right here, I would absolutely expect it to reject sharply off of it. If it didn't, and instead it ended up confirming it as new support again, that would likely invalidate my thesis, and I'd have some serious calculations to do. Technically speaking, though, it could push back all the way up as high as the previous support line in white of this massive rising wedge pattern around 535, and the wedge could still be valid, but that's a far stretch. And if you didn't realize it yet, the support line of that wedge on QQQ basically coincides with the same multi-year support line on SPY, which we can see right here when I switch over. There isn't much to add about IWM that I didn't already cover in my last video, and if you missed that video, I've linked it above, and it's got plenty of info that's connected to this whole video as well, so it could be helpful. We're seeing a similar pattern of subsequent double bottoms on IWM as well, and I could see IWM pushing up to about 209, pull back to about 205.50. Double bottom again, and then push up into strong supply and resistance around 212. If it rejects from there, I think it will make a new low in the coming weeks below 197, and the next key support level isn't until around 190 even, as you can see where it's been demand previously. But just like I shared in that last video, we're below this very major bullish channel. So anything below it, we could potentially see market participants selling the rip. What many don't realize is that at current valuations, we don't need a recession to lead to a significant correction or even a bear market. We only need a slowdown in earnings, and multiple analysts as well as economic bellwethers like Walmart and FedEx are already giving poor forward guidance. Many of you know that I usually chart on logarithmic scale, but I've switched over to linear scale just to make a point here. The market has grown exponentially off of high expected earnings quarter after quarter, and it will have to reprice it if it turns out that that is no longer the case. Slower economic growth equals decreased forward price to earnings expectations. Hopping over to NVIDIA, you can see on this naked chart how NVIDIA has absolutely also had a meteoric rise. And what shoots up like a rocket usually drops like a rock. All right, back to log scale, which is my happy place. If this massive rising wedge pattern that we've covered so many times before, when we take the measured move and we drag it over, typically with rising wedge patterns, you get your target with a measured move from where it breaks down from support. But even if we measure from this bounce high right here, it's still indicating that NVIDIA should hit around 100 even. And that obviously hasn't been met yet. If we take this measured move and we drag it over to this bounce high, we can see that one could argue that the pattern target has already been met if that's the case. But that seems less likely since this high was still above this main support line of the pattern. And in one of my recent few videos, I shared downside targets on other big name tickers like Microsoft that definitely haven't been met yet either. So please check those out if you're interested. Tesla has been getting a lot of flack lately, so let's give its chart just a little bit of love. Tesla has touched strong weekly support on the Ichimoku cloud and even on the monthly time frame as well. And that coincides with this previous resistance line of that giant symmetrical triangle that we covered many videos ago. That pattern was targeting about 469 to the upside, and as you can see, we overshot it by around 20 points. So this isn't guaranteed to go any higher. However, we did extend below the lower Bollinger Band here on the weekly time frame. We came all the way down here, and then we're pushing right back above it. When we switch over to the daily time frame, we can see that the RSI had a double bottom here, which was another form of bullish divergence. And I could absolutely see Tesla going back up and retesting the 200 daily simple moving average around 283, which would also push it up into strong daily resistance. After that, it's up to the bulls whether or not they can push through this resistance or resume the downtrend. Notice how Tesla is deeply oversold on the weekly time frame, but on the monthly time frame, it does have some room to fall. Back to the weekly, if the bears can push it below about 208 up to about 214 and flip this into resistance, this could head much lower. Alternatively, if strong support holds up from where this has bottomed, this could be the beginning of a strong rally to the upside and may try to attempt a fair value gap fill up to about the 320s in the weeks to come. Looking at Dixie, the dollar strength index, if you think this is all messy, I encourage you to go back and check out my early episodes to see just how accurately many of these different patterns played out. And I leave lines on my chart for historical preservation. Zoom in further in on the daily. This was the previous falling wedge pattern in purple that I called out weeks ago, with the previous support and resistance lines extended. Notice how Dixie struggled to get back above this previous resistance line and this key level here in red. then broke above, and it's now touching the previous support line, and I believe if it can get over it, it's likely to go for a gap fill up to at least about 105.50. But it has to get above the convergence of the 200 daily simple moving average here in purple, this strong trend line in green, and the key level of around 104.90. Otherwise, it's likely to reject and then keep moving down. For many who aren't aware, if you zoom all the way out to the monthly time frame, the chart of Dixie is actually in a very wide bullish channel. I mean, this has been going on since 2009. And that indicates that even if Dixie falls down, it could come down to basically around 97, and I would expect an extremely sharp bounce off of that level. And if we zoom all the way out on the monthly, we can see we have this upper descending resistance line here in red, along with this lower support line here in green, and look how they converge. Zoom in a little bit so we can see the apex of where they converge. This pattern is indicating that on or before the end of December 2031, something absolutely major is going to happen to the US dollar. And frankly, as a technical analyst, considering how many more longs we have in the dollar rather than shorts, this pattern looks like it's more likely to break to the downside very, very aggressively once this support line actually gets broken. If anyone knows anything that's expected to happen in 2031, please drop it in the comments below so we can all know. And if this is the only channel calling out patterns and targets weeks and even years into the future, and if you like that sort of thing, please consider smashing that subscribe button and tap for notifications so you won't miss these market moving insights. Many of you are probably saying, but he said VIX was targeting 60 plus. I did, and I still believe it could happen, but this is a multi-month pattern. Look how the VIX hit this weekly Ichimoku cloud resistance and perfectly rejected off of it. But if we add in all of our moving averages, look how they're all consolidating below this area. The VIX is currently resting on the 200 weekly simple moving average, but there's a possibility that it could come down to about 15 to 16 and retest this previous resistance line. And if it confirms it as new support, I could see the VIX blasting off, this time possibly actually breaking through this resistance. And interestingly enough, if we switch over to the VIX futures, notice how we're still well above this multi-year resistance line here in red that goes back to March of 2020. And this giant falling wedge is targeting a VIX futures of about 76, which is almost hitting that COVID high. If you don't think that there can absolutely be a Volmageddon 2.0 above this line, I think you're sadly mistaken, especially since up to this point, every time market participants shorted volatility, they got rewarded every single time. But now that could be completely reversed, especially if we hit this previous resistance and it acts as support. When I go over the ADD, the market breadth indicator, it's a measure of all stocks going up versus down, and the ADD can go down and the market can still go up because of heavy weighted stocks like Apple and NVIDIA. This symmetrical triangle broke down on Friday, March 21st, and the overall market pushed back up under this previous support line here in purple. And I think we're going to know Monday whether or not this was just a false break and then we're going to see the whole market rally, or if it rejects off of this previous support line and further moves down. YouTube tells me that 62% of you who watch my videos are not subscribed, and that makes me sad. If you're getting value out of my analysis, can you please do me a big favor and tap that subscribe button, which will make me happy. And if my analysis has helped you, please also consider liking and sharing with someone who may benefit from it too. Let's continue growing this community together. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.